Hi everyone, welcome back to Corporate Decoder, the place where we decode the complex world of corporate finance. And with this latest filing from QUHUO Ltd, we're about to dive into some serious accounting reshuffles and financial gymnastics. Before we dive in, if you appreciate getting these clear explanations of dense financial documents, smash that like button and subscribe and join our Discord community linked in the description below to keep the conversation going. QUHUO Ltd is filing an amended annual report. This is their second amendment, and they are changing their auditors. They've switched from Markham Asia CPA's GP. This is a significant change and usually happens when there are disagreements or when a company wants a fresh perspective after a period of less than stellar results. The company states the financial statements themselves haven't changed much materially, but the change in auditors is always something to pay attention to, especially when it happens mid-year as it did here in 2025. Let's look at the numbers. The company has a substantial amount of Class B shares, 6,296,636,000 come with more voting rights, suggesting that founders or early investors still hold significant control. In terms of outstanding shares, they have 809 Class A ordinary shares. And financial chef for Chant Perkoe is in the gig economy business in China, providing services like on-demand delivery, mobility, and housekeeping. Their revenues have been declining. In 2022, they brought in 3,822. They brought in 3,442. They brought in 3,040.23 to 2024 million RMB, and in 2024 it fell again to 3,046.9 million RMB. This is a notable drop of nearly 18% from 2023 to 2024 million RMB. In 2023 that dropped to 3,723 to 2024 million RMB. This is a notable drop of nearly 18% from 2023 to 2024. The biggest reason for this revenue drop is their on-demand delivery solutions. Revenue here fell from 3,412.8 million RMB in 2023 to 2024. This is a decrease of over 17% in just 1 year. They attribute this to getting rid of some underperforming delivery sites. Their mobility service solutions also took a hit, dropping from 233.8 million RMB in 2023 to 17.5. Turnfopt and betting their business Tenterfor, they blame this on fewer vehicle exports due to military conflicts, which is an interesting external factor impacting their business. This revenue decline is really hurting their profitability. Gross profit in 2022 was 250.7 million RMB, but by 2024 it had shrunk to just 73.7 million RMB. That's a massive drop of over 70% in 2 years. Their gross profit margin went from 6.6% in 2022 down to a very thin 2.4% in 2024. This means for every 100 RMB they earned, they're only keeping about 2.4 RMB after covering the direct costs of providing their services. Despite the falling revenue and shrinking profits, they've managed to cut down their operating expenses. General and administrative expenses decreased by nearly 20% from 184.3 million RMB in 2024. They did this by cutting down on professional service fees and other general overhead. The combination of falling revenue and still significant operating costs led to an operating loss. In 2023, they had an operating loss of 7.8 million RMB, and in 2024, that loss increased to 10.4 million RMB. So even with cost cuts, the core operations are losing a bit of money. Let's look at the balance sheet as of December 31, 2024, Ektu Toti 4 to Toti 6,726,000 RMB, which is around 11.8 million USD. Theft total liabilities were 406,000 RMB, or about 55.7 million USD. What's interesting here is the substantial amount of intra-company balances, which are amounts due from their subsidiaries and Vs. This is common for holding company balances, which are amounts due from their subsidiaries and VIEs. This is common for holding company balances, which are amounts due from their subsidiaries and V. This is common for holding companies, but highlights the complexity of their structure. Accounts receivable decreased significantly from 476 million RMB in 2023 to 225.7 million RMB in 2024. That's a drop of about 38%. This likely tying with the reduced revenue and indicates they're collecting money faster or maybe selling less. Now let's check the cash flow statement. QUHUO cash generated from operating activities was negative in 2023 at 97.3 million RMB and also negative in 2024 at 14.7 million RMB. This confirms that the company's core operations are not generating enough cash to sustain themselves. This negative operating cash flow meant that their overall cash decreased. The net decrease in cash and restricted cash was 54.6 million RMB in 2023, and a smaller decrease of 18.7 million RMB in 2024. They are burning through cash. When looking at their segments, the on-demand delivery solutions are still their main business. They made up 92.8% of their revenue in 2024. However, the other segments like mobility and housekeeping are seeing significant declines in revenue. They have a lot of deferred tax assets and liabilities and a significant unrecognized tax benefit, over 41 million RMB in 2024. This is basically tax that might be owed but isn't recognized yet due to uncertainties with tax laws. This is a common area of risk for companies operating in China. This filing also details significant share issuances in 2024. In February, they issued over 41 million Class A shares, and in August, they issued almost 94 million Class A shares due to convertible promissory notes being converted. This massively increased their total outstanding shares from about 61 million in 2023 to over 80-90 million in 2023. To over 80-90 million in 2023, 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 to over 80-90 million in 2024. This huge increase in shares will dilute the value of existing. The company reports a substantial unrecognized tax benefit in its other non-current liabilities, increasing by about 12.4 million RMB in 2024 to reach over 41 million RMB. This suggests tax positions that are currently uncertain and could lead to future adjustments. They also have transactions with related parties, specifically Hainan Huilier. In 2024, they received labor recruitment services from them for over 30 million RMB. This is a significant amount of business with a related entity and always warrants careful scrutiny. Now for my take on QUHUO Ltd. The company is clearly facing a tough market. Their revenues are down, their gross profits have been decimated, and their core operations are losing money. The massive increase in share count due to transactions in 2024 means that investors who held shares before this will see their ownership percentage significant shift in operations, or a major improvement in market conditions would be needed for a turnaround. The fundamental numbers paint a picture of a business in distress. The high unrecognized tax benefits and related party a future turnaround. The fundamental numbers paint a picture of a business in distress. The high unrecognized tax benefits and related party transactions add layers of risk. It's hard to be optimistic about QUHUO's current direction without a clear strategy to reverse these negative trends. A significant shift in operations or a major improvement in market conditions would be needed for a turnaround. Alright, that's our look at QUHUO Ltd's latest amended filing. What do you think about these auditor changes and the financial performance? Tell us in the comments. If you found this breakdown helpful, give it a thumbs up and subscribe for more corporate deep dives. And remember to join our Discord community linked in the description to continue the conversation. Thanks for watching Corporate Decoder.